On this episode of the podcast, I have with me Max Bruner. He is the founder and CEO of Anzen. We're going to be talking a little bit about his journey, how he went from foreign policy to being a founder, in the insurance industry. We're going to be talking about how he's working to speed up the pace of change, the impact of AI, and if we have time, we might ask him how he found this last round of funding, if it was any different than the previous rounds. Max, thanks for being on the show.
Great to be here. Thanks for having me.
Awesome. So before we dive in, obviously I alluded to the fact that you're in insurance, but tell us what Anzen does before we get too far.
So Anzen is a marketplace for all things executive liability, otherwise known as specialty insurance. That means products like directors and officers insurance, employment practices, cyber, professional liability. We are a one-stop shop for brokers across the U.S. to get quotes on these types of coverages.
Awesome. So we're going to get to current, but when we spoke, I found it really interesting that you had a little bit of a non-traditional path. You've done some different things before you became a founder. Notably, you've been in foreign policy. I guess if you could just help us and kind of take us back a little bit of, how do you take the experiences of being in foreign policy and kind of migrate and become a founder and that journey would be really good to touch on, just high level.
Yeah, I mean, it's been a process, obviously. And I think, when I started my career, I was really looking for maximizing experiences over, making money, I would say. And I had a real focus on public service. And I spent, probably even before I even got to college, I was pretty focused on public service and for a long time thereafter. So I've really navigated through, I think, world events in my academic interests, and those have kind of guided me. In undergrad, I studied Arabic through an interest in medieval Middle Eastern history initially, and found myself traveling the Middle East, working in the Middle East, and working for U.S. foreign policy think tanks, and eventually the U.S. government. So that was really where I got my career start, and I took it as opportunities came up. Obviously happy to dive much more into my time living in places like Egypt and Syria. I think ultimately, my career in foreign policy sort of culminated with some time in the Obama administration working on energy policy. And ironically, it's actually there that I had my first exposure to insurance, political risk insurance of all things.
Interesting. I mean, you've definitely taken a pretty interesting. It's just steps and paths and different experiences, which I think is fantastic. I don't normally ask this question for this audience, but I am curious. So I will ask you this question. We see a lot of times people, go into degrees that are more maybe non-technical because there's so many different paths, right? The more the arts or the humanities side, and you see them take different career paths. It's interesting because you took it upon yourself to kind of learn from each of those steps, each of those experiences, and build into what became a founder. And you probably observed a lot of these dynamics. You were introduced to a new concept of the political risk component. When you kind of just look back at that career and the journey, not having that technical degree or whatnot, I mean, that wasn't a limitation because it seemed like every step of the way you added another tool, maybe a soft skill tool, but you added a ton of tools to that toolbox to get to where you're at now.
I mean, I think, I look at all of our lives as you're sort of layering experiences, and at least sort of my education has all been about educating myself about the world, like gaining as much objective perspective as I can, making better and better calculations about each of my career and even relationship investments in relationships. And I think that building a community around you, both globally of people and also knowledge about the world, helps us make better decisions. So it's always been about better decision making. I think early on, there are probably some regrets for having not maybe studied more engineering or maybe, added physics to the quiver or something. I think I've always felt kind of following both my intellectual interests, and what's happening in the world and seemed relevant. I felt like there were always a number of people who could be better at math or maybe better at engineering than I was, but I always felt like there was some innate ability to kind of organize and lead people. And to do that, though, required a really good breadth of decision, critical, leadership, critical decision making. And so for me, for better or for worse, that meant a lot of time in the world in different places, and over time, using that to make decisions about both whether it be business or sort of policy decisions.
Seeing more places, the world, seeing different perspectives. I guess I'm kind of hearing those all give you a different depth and breadth of being able to evaluate different situations and make those decisions, improve yourself. And I think it's interesting as as you kind of describe the journey and you spend some time in different countries. I mean, in the end, you're working within the risk insurance space, so that is what it is. But you're probably taking on all these different data points of all all these different steps. And you saw insurance at some point during the journey early. How did you dotted line back to insurance with everything else that you'd seen along the way?
I mean, I think even before insurance, my interest was in quickly became in building businesses and in the opportunity that all of the new that technology presented me and presents many of us to build new companies and to be disruptive in different spaces. I mean, I think we saw it. I saw it in in the Middle East, with the way that people communicated, whether at that time, back in the 2000s, it was over late 2000s, it was over Twitter, and over social media. I mean, I remember talking to my family over Skype every day. That was the only way to even communicate with home. Our cell phones had different SIM cards. Like, it was a very different time for communication. And I think over time, a lot of my focus is on the geopolitics of energy in the Middle East. So when I came back, one of the drivers for me coming back to Washington, D.C., and ultimately joining the Department of Energy for that time that I was in D.C., was because I was starting to look towards the future. And I was really excited about what we could do to kind of change the political reality of our foreign policy and invest more time in renewable energy and new technology. So that was sort of it was a shift in my thinking as I spent more time in the Middle East. And then as I spent more time in research and development and technology, I think that really honed my perspective on the opportunities that were available to go out and build new companies. I remember there was a moment right before I went to grad school where I became so interested and obsessed with sort of new software and just like learning as much as I could conceptually about new technology and even like new hardware. I mean, I remember there was a moment where I was so obsessed with all of the chips in our phone that I must have printed out like 300, 400 pages on Wikipedia of I just kind of went down a Wikipedia rabbit hole and built my own kind of dictionary of terms of different hardware and software concepts just to familiarize myself with everything that was out there. And that really opened my mind, I think, just that kind of balance of seeing the world, seeing how it was changing, realizing that, I really wanted to have more of a hands-on approach to how I was learning and the things that I was building. And that really led me ultimately to think that building companies was potentially a more impactful approach for me to have impact than maybe, US foreign policy or policy in general. I wanted to be sort of the driver, not just sort of creating frameworks for others to have impact, whether it be domestically in energy or internationally in foreign policy.
I guess I actually really I find myself I don't like to buy new products because when it falls to me, I end up going down those similar rabbit holes, and it's probably a complete waste of time in buying simple products. But I just get really interested in understanding how stuff are built, made, and all of a sudden, my wife's like, "Have you finished that?" I'm like, "No, I'm still researching." She's like, it's a minimal purchase." I go, "I know." So I completely relate to you on a different scale.
I've made the wrong decision. I've done the exact same thing. I remember when I bought my first, was it with a mini discs? remember when there was the moment MP3s weren't in yet, and I remember I went through like a 4 month. My dad was going to buy me the new music player. He's like, "You decide what you want," and I decided that I was going to get. I think it was mini discs. I bought like the Panasonic mini disc player. It was a terrible decision. Of course, MP3s were made so much more sense, but same exact process. I spent months researching all of the pros and cons to MP3s and all the different versions of not having a CD player. And I wound up with this now defunct. I wish I still had it. It would be one of those great like artifacts to have on the wall.
Definitely.
So
Actually, let me ask you this because I'm curious for myself, and I'm always trying to improve myself on this. Being people that we like to go down these rabbit holes and learning when it is judicious to actually do that, and when it's like I need to stop myself because it's $100, 205. Just the ROI isn't there. Have you found yourself, or have you kind of developed some, structure guardrails to keep yourself from, just going down rabbit holes that are not needed?
that is an excellent question. And I think this is part of getting older. I know that for me, it's part of like making those mistakes and learning from mistakes. I wish that I was sometimes better at intuitively making some of the right decisions. I feel like my life has always been about experiencing it in real terms, like whether it be the positive outcome or the negative outcome, and then learning from that mistake, whether it be my first or my second company, or the right or wrong management decisions. Ultimately, I think we make decisions based on outcomes, and so over time, being better at predicting sort of the magnitude or the impact of a decision and its outcome has sort of helped me prioritize which decisions to spend time on. That would be number one, sort of being better at calculating outcomes. And then I think number two, surrounding yourself with great people. Like that's been the most important sort of outcome of the last 20 years for me, really, has been over time building a community around me where I can gut check, and frankly use people in some cases to second guess my own decision making, and that's made me much more efficient, kind of giving me some guardrails, if you will.
I love it. That is actually some great piece of advice there. I want to fast forward and jump into a little bit about the insurance side with the time I have with you. Insurance, obviously, it's not maybe it doesn't sound glamorous from a lot of the other options that you might be looking at, or other people are considering. It's got its nuances. It's got a little bit of stigma, maybe slower pace of change. I think healthcare insurance kind of are behemoth industries, but we don't think about them as super fast paced industries. You pick risk insurance. What were you seeing? What were you hoping to accomplish? You like the big idea, making the change, the macro. What was it that you saw in risk insurance?
So two things. I think number one, insurance has been around. So I've always been interested in sort of the products and services that make the world work, and that's a very different framework, I think, sometimes than how many people wind up in technology. They like kind of the cool, sexy kind of vanguard of what's happening right now, and I do too. But I think we sometimes miss the application, right? And by the way, my first company was a drone company. So I have also like done the vanguard, been excited about the new cool flashy thing, which is incredibly sexy and gets you up in the morning sometimes. But back to learning from outcomes, at the end of the day, building a business is about making a profit or selling the business and producing something, a product or service that's of value that people need to buy. And I think what's been really compelling about whether it's agriculture, which is my second business was all in data science around agriculture, or today insurance, are picking industries that produce products and services that make the world work. So whether it's corn, soy, wheat, and cotton, or in this case, insurance, since the since 1500s, 1600s, insurance has made it possible for humans to take risk. So the history of the industry, and also how important it is for businesses to run, for us to get in a car and drive it, and for that to make financial sense. I find that really compelling. Then add to that, we have it's a massive industry. There are companies that make money. They are profitable. I love being able to look at the financials of publicly traded companies and know that there are companies that are doing really, really well, and they aren't even full on technology companies yet. So now take a successful industry and then layer the vanguard of technology to that. I find that combination really exciting, and really important. And I think sometimes we miss that in tech. I think that sometimes we focus on how can I build a new industry out of technology while forgetting that there are massive industries to go change if we apply technology in the right way.
Yeah, I think it's really interesting because I think, well, we're seeing it now in the last 12 to 18 months. Companies that are making money and not making money. I mean, we've seen this concept of growth in the companies that make money that were not in vogue, that were not glamorous, but are doing well. Insurance is one of them, right? And I think when you're looking at the incumbents, the legacy companies, and how their gap to evolving to becoming a faster paced organization, which they're trying, this the quote unquote digital transformation is always out there where they're striving for. And then you have companies like yourself that you're trying to go, hey, from the ground up, let's actually compete and jump to a point where we actually have the advantage. When you're looking at that and you're looking at obviously how AI will make things more efficient and how you can actually help companies within this risk insurance space, how do you view what you're doing and the technologies you're developing versus, hey, these incumbents at some point are going to implement something to kind of try to catch up?
I mean, look, I love industries that are slow moving, as they tend to be the less sexy ones, but I think that therein kind of lies the opportunity. And I also like industries that have tons of data. So, insurance obviously is an industry that has tons of data. I think a lot of companies, incumbents, probably think of themselves as technology companies just because they're sitting on so much data. The reality is that because they've been around for so long, they're also sitting on really old, let's just call it infrastructure and data systems. So they're very slow to make changes. And I think that's now finally beginning to also change. So I think the opportunity for us really has always been that there is very consistent workflows. There's very consistent process to how insurance gets done, and that makes it incredibly ripe, especially for a startup, to come in and build a better or more efficient workflow, and serve the industry that way. And I very much think that the incumbents will catch up, but it's just going to take them a lot of time. And in many cases, they're so comfortable, there's no reason for them to move quickly. They can buy companies, they can wait 5 to 10 years. And I think that's both a good thing for startups because it means we potentially have many exit options. And I think it also makes it challenging because the large incumbents own the industry so much. There's inherent advantages to their scale that startups just don't have.
I could tell you, yeah, obviously I won't name names, but I'm going to have a guest on that is at a very large insurance company. And we're going to be talking about how they've gone through digital transformation, and they're just at the precipice of trying to leverage data science on their data, and they have enormous, I mean, obscene volumes of data. So what you're saying really resonates with me because they're this big, massive, multi-billion-dollar ship, and for them to steer, they have the data, but they may not be able to leverage it. You are accumulating data quickly, and it's going to really just ramp up. And you have the infrastructure. It's this very compelling battle and race that we're seeing constantly. You see some companies, you see like some banks really do well. Chase has done very well at trying to become a technology company, and the service is reflected. And then there's other banks that people might use, and they're like, oh, it's just frustrating. It's difficult. And I think the insurance company, I think that's where insurance is maybe a little bit slower than most other industries, and I think that's where you're talking about.
And I think banking is a really good example because we've seen financial services do this ahead of insurance. And I don't think it's not exactly competitive. It's not a zero sum game. It's very much become banks either acquiring technology or seeing examples of what works and then adopting those practices. But they have to deal with the bureaucracy of the way they do business. They have to deal with brick and mortar locations. They have to deal with multiple countries. There's so much that means the politics and dynamics of adopting new technology just take time. So I like to think what we're doing is very, very much collaborative, and hopefully both incentivizing and one day drives like incumbents to sort of re-architect.
Absolutely. I was going to ask you. I know we're going to run out of time. I want to make sure we covered this. Obviously, we talked about the economics. We've seen that impact happening and playing out. When it comes to funding and what you're seeing, obviously you can compare that maybe to previous rounds or previous companies, previous rounds. I mean, how hard has it been to get that funding at this point?
I mean, it's a night and day difference now than it was, I don't know, 8 years when I raised my last Series A or financing. And I think, fortunately, we were able to raise kind of on time. We were able to raise the amount that we had gone out and targeted to raise. So let me kind of frame it in two ways. Macro, obviously, I think everyone knows it's changed significantly. I think what made us successful in the process was we worked really, really hard to build out financial plan and get close to hitting that plan. So we were lucky, and we've had a very fast growing business month over month. We've built a really experienced, seasoned team, and we've been just very focused on the numbers from day one. I think what made us successful was we really, in a way, got lucky, just given the trend in AI, but insurance really is one of the first industries I think we both believe and are beginning to see impacted in a real way by AI, and not just sort of writing copy for LinkedIn, for example. It is you are working everyday like transactions using AI and running a back office. We run part of our back office with a bunch of automations we've built, and that just continues to get better every day. So it means less headcount, less cost. It means better service to our brokers and our clients. So I think that had a big impact on our fundraise as well. And then finally, I think I ran a real tight process. I mean, didn't go out thinking, oh, I'm just going to get money from these handful of investors. We really ran a full pipeline and just kind of played the numbers game of we need to do a lot of pitches and we need to run it like a sales pipeline and not really prefer any one VC over another. Obviously, we hope to get the best possible partner and the best possible term sheets. But I think that was really a successful process. The market actually worked in our case, but we made a lot of pitches, many, many more. I would say at least 3x more than I would have done in a previous round of financing in a previous year.
Interesting. Well, Max, I appreciate it. I know we're running out of time, but I really want to thank you for your time. And if somebody does want to reach out to you, what is a good way to get a hold of you?
Easiest is probably team@anzen.com. That's team, TEAM at ANZEN.com. We would obviously love to do companies insurance, directors and officers insurance being the key one that any company who's just raised a round of funding, especially if it's a priced round, is usually mandated to get. That's been a big, driver of our business. And we'd love to look at people's insurance applications, but also I'm always happy to advise founders and other people building companies. It's definitely a passion and side hobby of mine, just helping others. So yeah, thank you for the time today. I love talking about these topics.
No, definitely appreciate having you on. That's it for the episode. Back again, different guest, different topic. Until then, two things. One, share this episode. It's I love Max's background, just the way he thinks, and I just think his journey is a great story. Hopefully, some of you out there will like it and share it, and we'll get everyone to listen in. Also, please subscribe, like, comment, review. Let me know if you want me to talk to a specific guest about a specific topic, and I'll do my best. Until then, thank you and goodbye.